right, Matt, you have control.
Thank you, sir. I appreciate it. There's a couple people in the waiting room. You want me to admit them? Gotcha. Thank you very much, man, for having me. I appreciate it. Looking forward to this discussion right now. So for those of you guys who don't know, myself and Tom, let me know if this is going to be a discussion or if you want me to just go, because I got so much to talk about. It's pretty cool. So for those of you guys who don't know, my name is Matt Owens. I'm a California licensed CPA and a full-time real estate investor. I flipped over 1,000 houses. We flip about 5 to 10 a month right now. We have about 25 million lent out to flippers in different markets around the country. We do a lot of value add multifamily projects. We invest in all types of different syndicated investments consistently. And then we help run a nonprofit called For Investors by Investors, where we teach financial education and real estate education involved. And so we just go through and try to teach as many people as we can. And the people that want to work with us, they come work with us. And we just try to bring resources to the table for different investors. So, we have lending business, and then we have our flip business. And we also have a lot of our own buy and hold strategy investments. We invest in multifamilies, mobile home parks, self-storage, you name it, we've probably invested in it. And through that, obviously, you learn so many unique, I'll call them lessons, or call them life lessons, to basically make sure that, you're going to lose money along the way. You're going to take your hits along the way. You're going to go through and really try to learn from those mistakes. And a lot of the way you do that is by coming through, and our topic today is scaling, and the best way to scale and the best way to mitigate risk and solve problems in your business and be able to get over those hurdles is to set up the right processes and systems and the foundation up front for this. And so when we first got started, we were doing a couple of deals, every maybe one a month if we were lucky, and we were focusing full time on it, and we were finding deals in the Midwest, buying them, renovating them, and tenanting them, and then reselling to other investors or reselling them to homeowners. And doing one a month is a lot of work for a lot of people, and we were doing it full time, and my brother and I, and we had a couple of other people that work with us. And now we have a ton of different team members all across the country. We're in 20 different markets, doing 5 to 10 a month, plus the value add stuff, plus 20 plus loans a month consistently. And the only way to do that is to document all of your processes in each one of your major segments of your business, and find ways to get other people involved to help you with being able to actually go through and implement those processes with the right reporting requirements involved, so that you don't have to take your hands off the reins. Because as you know, in real estate, you take your hands off the reins and it starts costing you a significant amount of money if they don't have the same expertise as you do. And you can't expect them necessarily to do that. But what you can do is have them be very, I'd say, solution oriented, instead of coming to you and asking you for problems, which drags you back into the business, or asking you for solutions, that drags you back into the business. You're going to come in and have them be coming to you with those solutions. So it empowers your team to be able to scale, because otherwise, you as the business owner, or you as the primary focal point on the operation side, is going to be dragged back in. And it still happens. And it's very difficult to train your teams this way, but it all starts with writing down the right processes and procedures for each segment of your business. So I'll give you an example. We have our lending business, right? So in doing that, you have to kind of outline the entire process from beginning to end. How are you starting to get that lead in the door? How are you tracking all of those leads consistently? And what activities need to be done? Even if you can't do it fully yourself because you're inefficient at it, or you're doing too much, what should be the right process for bringing in leads through the door, tracking them, the follow-up consistently, the marketing campaign back to different lead flows that are coming in. And then as those leads come in, what is the due diligence process to analyze deals extremely quickly, to get the bad ones off your plate, go through and really focus on due diligence and that process associated with it. So you have to have teams after a while analyzing these properties because there's so many of them. So this is the process. You break down the starting point, the initial analysis and due diligence, the closing process, the operations process on the back end, and then the sales process piece by piece. And you're breaking it down based on, marketing categories, accounting, legal, operations, human resources, and all of these different things have a process to go within that, in order to actually start scaling, right?
Yeah. So yeah, Matt, it's probably good too to give everyone an overview of the size of your companies, right? Including your debt fund, which is a very sizable debt fund.
Mm-hmm. Yeah. So we right now, like I was saying, we have over 25 million lent out to flippers in different markets around the country. And we're going through and really focused on growing organically that way and setting up systems and having less overhead, less employees and things like that to be able to go through and use technology to automate pretty much everything in the business as best we can. And so I don't have a very big internal outfit. I actually work with a ton of outside subcontractors and joint venture partners and things like that to do the bulk of my work for me. And it's important to have them have ownership percentages in those deals to do a lot of the internal work.
Yeah. And I think this is important too. And again, you're managing a large debt fund. I know you have other connections now as well. You have your own flips. So you've obviously scaled this up to the next level, right? And I think as someone who has those ambitions, who I hope many on this call do, what you're preaching here is if you're really going to scale up a lot of streams of income,
right,
4, 5, 6, whatever it is, you will need to have systems in place, solutions in place, and you're right, a lean operating team, as lean as possible, to help essentially outsource that work.
And I think it's important to understand what your capabilities are as a business and what your goals are. So one of the books that I think was one of the best books I've ever read was called Traction by Gina Wickman. And it helps you set up what's called your entrepreneur operating system. And it basically says, hey, start with your 10-year picture involved. If you're saying, hey, I want $50,000 a month of passive cash flow coming in on a monthly basis in 10 years based on this activity that I'm doing now, what does that look like? How many properties do you have to own, or units do you have to own, or strategies or notes to have to actually own in order to get to that $50,000 a month? And then you break it down and say, okay, well, what do I need to do within the next 3 years to get to where I would need to be, where in 7 more years, I'll be able to get to that 10-year plan. So you start with your 10, go back down to your 3, and then your 3 year, then 1 year, then 6 months, then 3 months, and then immediate month and week, where you look at this consistently, this plan to try to get to your goal every single week. This is in your face at all times. These are the activities that I have to do to get to my 1 month goal. If I hit my 1 month goal, this is the activities that I'm going to have to do to get to my 3 month goal. And you consistently keep that in your head, because as you know, when you're thinking about it all the time, that's how you become successful, is really focused on those types of activities to get to that goal. Right. Yeah.
And I think, this was an epiphany of mine, 4 or 5 years ago, all that you're talking about, right? Systems and streamline and outsource. A little anecdote story. I had these partners in Houston who were very successful, big developers, and we were looking at a deal at their office, and they had this concept, return on headaches, right? Because at some point, it's not so much about return on your money; it's about return on headaches, right? Because eventually you will get to a point where you make enough money where it's about your time more than money, and so systems and solutions will be everything. And one thing when I learned kind of this concept, I had a problem trying to figure out, well, okay, great, I get it, I believe in what you're saying, Matt, but where do I begin? And where I began was thinking about my day-to-day and thinking about things in my business or whatever it was, my investments, that was a repetitive nature that was consuming my time. And those were the opportunities that I identified to outsource or replace with the system. Is that how you went about it, or what was your philosophy?
It's one of the best strategies, honestly, to use. Write down everything you hate doing, and then write down everything that you are doing on a daily basis. It takes a couple of weeks, right, to literally go through and say, did I just literally answer emails for 4 hours right now, or 5 hours straight, or sometimes all day long because things are happening? Why am I answering those emails, and what activities are happening within those emails that cause that havoc, that make me reactive instead of being able to plan my day correctly and being able to really focus on being, I'd say, strategic about your time and your day. And the best way to do that is write down everything you hate doing. Like as you do it every day for 2 weeks, it's like almost like when I used to work at a CPA firm where you'd have to write down your billable time, and you'd write down, 15 minutes on this, 10 minutes on this. It's super important because it gives you major clarity. And then you're going, wow, I just spent 2 hours today or every day for the last 2 weeks on sales. What happens if I got a salesperson in place? And by the way, I suck at the follow-up because I'm too busy over here doing operations. How much more money could I make from that salesperson in place? And what would the job responsibilities be of that person, so that way you can go through and say, great, that's right, I'm going to put this person in place. But more importantly, how are they going to report to you so that they know what they're doing on their job, and that they're tracking correctly on all their stuff, and they're doing what your expectations are? Are they following up on a certain time frame on all these leads? Are they giving you reporting on these leads consistently to say these are the different pipelines and the different people in the pipelines? That I'm just giving you sales leads as an example, but it happens with every piece of your business, right?
Well, and by the way, even that piece, right? I hired an admin way back who is now my been promoted to my project manager on my land deals, and her sole job is to keep people accountable on timelines. And what you just said is essentially control that piece, right? So eventually, you find ways to operationalize as much as you can of all the the noise of your life that you don't enjoy doing, so that you can get up and focus on those big needle moving things that actually result in substantial revenue growth in your business, your company.
Right. It's like, should I be networking with the right people that are six-figure type people to raise that capital? Or should I be going through and solving a complex issue with my company that's a tax and legal issue that I need to really focus 100%. On to get the right structure out and set up a new structure, or make a major shift in my company or something like that, right? It's super, super key. And I think, people need to understand what the goal is, right? Doesn't matter how much money you make. If you're working 15 hours a day, that's not freedom, and it's not true wealth, right? True wealth and true freedom is time freedom, where you may decide to step into your business and correct some things and fix some things, but at the same time, you don't have to be working in the day-to-day operations if you don't want to. And what that allows you to do, and what it's allowed me to do, is take my finger off the pulse for the most part on the operational functionality of flips. Where we get deals, it goes right through my pipeline. I do a final review of that deal to make sure that everything looks passes my test as far as my own risk tolerance level and things like that. Because sometimes these guys will bring me $300,000 rehabs, and I'm like, hold on, wait a minute, let me take a look at this. Am I rebuilding a house? So and then on the other side, on the operations side, I have people reporting to me. Here's the status. Here's the timeline. Are we over budget? Are we on budget? Are we over budget on time? Are we on budget with time? Where's the problems lie on all of your buy and holds? Who's paying? Who's not paying? Who's reporting to me all that information, and managing the managers on that side? So we have our flip business doing consistently more flips. We're buying about 10 a month, and we're probably flipping 5 and holding 5. And so we have a refinance side over here that's helping us now in our hold business. And we have our goals with our buy and hold cash flow deals too. And then our goals with our flip product. And then we have our lending business where we're making $50,000, $60,000 a month right now, just on lending alone, and being able to lend capital out, making interest rate spreads and things like that. And it also enabled me now to go and focus on bigger syndicated investments that I can now go focus on and, invest passively on my money that will make me money. Now you got to do a lot of upfront homework on a syndicated deal, right? You're vetting the operator. You're going through and doing all your due diligence like you would on a normal property, and maybe flying to the market if you're investing a significant amount of money, looking at the financial projections and the paperwork. But now it's allowed me to do that. So then now I can start investing passively, even though initially it's a little bit active, right? So it gives me that ability to scale on multiple asset classes and multiple
100%.
income streams.
Yeah, it's hard to have, two or three dinners per week with partners or JV partners if you're bogged down with doing bookkeeping.
Right. And I even have my, operations manager, they're managing with my JV partners and things like that, and meeting with them every week. And it's hard after you do this, you realize there's just so many touches that you can have in a day, and you start to be very, very restrictive on who you talk to and who you're actually communicating with on a daily basis. Because, to me, my kids are the most important. I don't care about talking to people anymore. I got a 6-year-old and a 3-year-old, and I'm interested in showing them how to play the game cash flow and taking them to soccer and things like that. And you start to realize that time freedom is the most important thing in the world. And I try to do the time freedom thing with my wife about doing the dishes and stupid things like that, and she just laughs at me.
Well, you know what? It's funny. I even outsource that. You got to outsource as much as you can. Anything that's repetitive.
I try. I'm like, hey, can we just get a nanny to watch the kids for an hour? And she's like, we might as well just get a new husband too, So she's like, you don't want to be there. Great. It's all in fun. She's joking with me, but at the same time, she's she's right though, of course, and it's a matter of focusing your time and valuing your time as the most important thing, not money.
That's right. So let me ask you, and this is kind of a curveball to the conversation, right? But I think this is important to talk about because I'm guessing some people on this call are investors that might have retired from their job, that have LLCs that want to buy products or properties with their LLC. And you have a unique product that I've not seen in the market, right? And I think it's worth spending 5-10 minutes on this product to let everyone out there know that they can use a loan via an LLC to buy property. So would you just give us a high level overview of this?
Yeah. And I'm using this for all of my deals, and we just got set up to be able to do this ourselves about a year ago. And it's been amazing. And we basically, there's 30-year fixed rate loans out there on single families through fourplexes for rental properties that will loan directly to your LLC, that base the qualification based on the cash flow of the property and not based off of the income of the property owner specifically. Yes, you need to have enough cash reserves for 6 months of principal and interest. And, you need to back it up and show the rental income coming in or a lease that's in place and things like that, because they're verifying just like a commercial loan would, on a multifamily, they're looking at it saying, what's your debt service coverage ratio, which to see if the cash flow in the property covers the debt correctly. So, we can do unlimited of these loans, which is pretty crazy, at around 4.5% to 5% rates. And you can buy these things down and things like that as well. So I'm loading up, because at the end of the day, you're talking about massive long-term inflation that's going to inflate away the dollar on a 30-year fixed. You just don't want to take crazy leverage if you can help it. We can go up to 75 and even 80% in some cases, but I like leveraging at 70 or sometimes 65, just because if there's downside risk in the market, you don't want to go and have a very thin cash flow. You want to make sure you have a couple $100 of extra cash flow a month there in case to counterbalance a downside risk in the market. If there's a reduction in rents, we've had a massive bump up in rents. You want to make sure you have that reduction built in just in case money, and then get that 30-year fixed in place, because you can just kill inflation that way. If you do the math and show what that happens to the inflationary dollar or that debt payment, along with the increase in rents and the increase in the property value, it's pretty crazy what would happen with inflation. Now, there's obviously a bunch of mitigating factors and things that could change that across the board. But it's a great product. We also do a joint venture strategy where we put up 100% of the money on a deal, even on a flip or a hold, because there's a lot of people out there that are great at finding deals. They're just juggling money all the time, and they're limited by what they can do because they don't have all the capital to put up the extra money on top of a hard money lender. And, we do hard money as well. If people want to borrow money from us in different projects, and we'll do 100% of the purchase and rehab costs up to 70% loan to value. But, on a joint venture type deal, we basically do a 50-50 split, and we'll hold it long-term too, and even build in a rehab management fee so that people can keep the lights on in the meantime. Yep. And then we do the financing, and then people can go through and just start building a portfolio using our money and finding those deals and helping manage the construction of those deals to get them up and running and hand it off to management. So It's a great strategy that we've come up with. And a lot of people think, 50% is expensive. Yeah. If you got your own money, use it. That's the most, you can keep that deal. But if you're not, and you just want to scale, you're going, I never want to deal with the money. I'd never want
yeah,
that covered, so
well,
that's what we do.
I would say too, I think if you're in that situation, my guess is, and this could be kind of a condescending comment, but you might not be the most experienced investor if you're in a situation where you need to pull in 100% someone else's capital. And I say that because if you're in a situation, that's fine. Don't discredit the learning experience that you get by being with a sponsor like yourself that has a plethora of experience that you'll learn from. And that alone is worth it's weight. Well, there's no weight, but it's worth a lot. Right. And so I would say, even though, yes, those JV deals are expensive, you're learning a ton. Right.
Well, and honestly, like we coach everybody through the rehab. We make sure that the deal is a good deal. We're going to look at the comps. We're going to look at the rehab bids. We're going to look at the entire cost structure of the deal and the cash flow analysis. And we're going to look at every way possible to make as much money as we can. We had deals that we were making a 10, 15% margin on, and now we're making 30 because we decided to go seller finance to a homeowner on financing and carry the paper instead. And now we're making a double cash flow spread than we were by holding a rental instead on doing seller financing and then leveraging the paper. So there's some really cool strategies, doing wraparound mortgages, doing all that type of stuff that we know about. I think, last time we talked, Tom, I had told you about a deal that if you understand how these things can get structured, it's unbelievable. I did a loan out of my 401k for $500,000 at a 14% interest rate for a 1-year term. My 401k then borrowed $450,000 of that $500,000 from a private investor at an 8% interest rate. And my 50 grand left in the deal made a 68% return on investment. And I do this over and over and over and over again. But what did I have to do to learn how to do that? Right. I had to go through and learn how to make sure we don't get screwed by the borrower and they don't steal our money, and that they know what they're doing. And I underwrote the property right. I had to know how to deal with the paperwork to protect my investor, because the number one rule of ever borrowing people's money is never lose it, because that's hours of their life that they spent accumulating that money. So that's the most important thing, to do that and set that up correctly so that they're protected and they know the risks and they're educated on the risks. The last thing you want is an uneducated capital source. We got yelled at before from a private investor that signed a release for the closing on a deal, got paid off by the closing attorney, and was like, I'm not getting paid my interest anymore. I'm getting screwed. I'm like, you obviously don't understand how this works. You got paid your investment off. I can't really have you invest anymore because you're scaring me, these things happen. But, I think it's important also to talk a little bit about the differences between being passive and being active on your investments, right? Because there's a place for both of them, right? And they come with different types of pros and cons. So, I know, Tom, you invest in a lot of syndicated investments and things like that, and do different strategies. And it's a great strategy to use. I diversify, put 50 to 100 grand a pop into all these different operators, into different asset classes and different markets of the country, but I'm giving up control to an operator that's going to do all that work. So I got to vet them, make sure 100%. They know what they're doing, and really feel comfortable with them and their expertise of doing this, and understand what type of person they are, because they could be inexperienced and still have a great win. And if they could go through and be great, have great experience, but then have the mentality of, no, I'm going to make my money and my investors are second to me. So that kind of mentality is what you look for in someone that, you don't want to invest with those types of people that go through and have that, type of mentality.
Yep. Yeah. I mean, it goes back to the operator that Mitch and I talked about, operator cash flow project, right?
Right.
So we have a few minutes left. We have some questions coming in. As investors, we often start off doing everything on our own to learn and grow, which is great. How do you know when to scale? How do you know when to start outsourcing? Ultimately, don't want to put the cart before the horse. I'll go first, and then maybe you can take an attempt here. But it's a great question. It's one that in my early years of doing real estate, I had to deal with. I didn't make a lot of money in real estate, so I didn't want to spend half of it outsourcing it to an admin or a project manager and all that. And unfortunately, from my experience, you're going to have to grow to a point where you are making enough income to pay for the systems, pay for the people to do the work. And I think your return will be magnified very quickly because, again, you'll be working on the big projects that do move the dial. But it's going to take some time. So I don't know what your numbers look like, but at some point, I would set up what your ideal lean team looks like to outsource as much as possible, what that's going to cost you per month, and then figure out how you find that income. So,
and I think in my eyes, it doesn't matter when you start to scale. The most important thing is to focus on being the business owner and not the self-employed from the start. So what you're going to be doing is you're going to outline that process that I told you about on start to finish on any deal. What are the tasks that have to be done? And can you build someone else into that deal that gets paid on a per deal basis so it doesn't increase your overhead? It's going to increase your cost of that particular deal, but you can hire a rehab manager, for example, that's going to be at your project every single day, picking out materials and doing that whole project, and pay them a flat fee as part of that project cost. You can go through and hire that accounting person that really knows that side, that can track your budget versus actual on every single project and keep it up to date on a weekly basis, for example, and build them into the cost of the project. But setting it up now as if, how do you figure out how to do nothing from the start, saying, no, this person's doing operations, this person's doing accounting, this person is doing marketing, this person is doing sales. Everybody gets a piece of the deal. I'm going to make less money out of the deal. You could hire them and do that if you feel like it's cheaper, but there's, a risk tolerance level there that, you might be paying more money per deal if you're paying them as part of the deal versus a salaried type person, but they might care more as well,
Yeah, this doesn't just apply to real estate, right? This applies to anything. Right? If you're an entrepreneur in any way, and that can be someone that just has a passive lending business, you have 10 to 15 loans that you give out every month, or maybe you have a small thing on the side, whatever it is, it's the same concept, right? You're looking for ways to outsource the day-to-day that's repetitive. And it's a hard investment to make because it's somewhat feels counterintuitive to what you should be doing, but it is a very rewarding decision once you do make it.
And I think it's important to state too that, at the end of the day, everyone, I was going to say, hey, look, if you're 99% of us, then none of us have any time. So at the end of the day, you need to go through and do that from the start. I know I need to hire a CEO to come in and replace me for a lot of what I do, but it's a couple $100,000 to do that. It's an emotional, hard thing for me to do that, right?
Yeah.
And bring in that person to do that. But I know that it will bring my business to a whole nother level if I was able to go and put that in place, right?
Yep.
So, or when I'm able to do that, I would say not.
Yeah, and so if there's a good chance if you're at a point where you're considering it, it's probably the right time to do it. So,
yeah.
So last question, and then we'll have a break before the legend comes on, Bill Danko. But comes from Eric. He says, I heard you say something about 30-year fixed loans directly to an LLC based on cash flow, signed leases. Is that a no company credit? Or so basically what I think he's getting at here is, do you need to have proven financials, proven revenues, any of that, or is it simply based on the deal itself?
It's based on the deal itself. They will pull your personal credit to make sure that, you're credit worthy there. I think the minimum is like 650 on some and 680 on another program we have. But it's not based on your personal income. The property in itself is what they're qualifying. And they're saying, is it rented? Is that rent going to cover it? So you want a rented property already. So if you're doing a fix and flip type deal, fixing it, rehabbing it, then get it rented, then go refinance it after it's completely done and occupied. And then you can get that 30-year fixed rate in place and do that Burr method refinance as best you can.
Awesome. But by the way, Mitch just ordered traction. He says, thanks, Matt. So another question, and this is probably from me, maybe from John. I understand this whole outsourcing argument, but there are so many hacks to go through. Harsh word. And they're transient. How do you find good folks? Outsourcing to fools, crooks, and cheats, isn't it? Yeah. So I've had my lessons in definitely hiring bad people. Not necessarily bad people, just they weren't worth their price. And I've outsourced to the Philippines, to Ukraine, to Brazil, to India. I've tried the outsourcing thing, and I still have some of my areas of my companies outsourced to India for web development, or so in the Philippines for customer service. But I brought a lot of my stuff back to the United States. From my experience, I did find that US based people have a different standard for quality of work and for like just the care for their work. And that's just my experience. I'm not saying anything bad about anyone else, but I used Upwork to get started, and I found some really good gems on there. They have a rating system, reviews, and all that. You absolutely should interview a bunch of people before you select one. Yeah, it's a risk, right? But there is, at least from my experience, some intuition, some sort of click when you find someone that's good. And I think I would also encourage, what I did was, for anything that I was trying to outsource, I'd get on Zoom and I would go do it and record the video step by step. And I would say, step one, you do this, step two, you do this. And that recorded link is a training system that, again, is outsourced. You simply give them the 5 or 6 links and train them on the process, right? And I have 2 companies that are completely streamlined, and I work maybe 4 hours a month on them, and and they're paying the bills, right? So that's my advice.
Yeah, I think I agree with 100%. At the end of the day, it comes down to interviewing a lot of people, testing them to see what their expertise are, how they communicate, are they following up correctly, and things like that, and not giving them tons of responsibility initially until you find that right person that is great communicating. We found a lot overseas as well as here, and we have different subcontractors and transaction processors and things like that that we utilize, and it takes time to test them. And it also, they're only going to be as good for us based as the amount of time you're able to spend training them and setting expectations of what you expect with regard to reporting
100%.
back to you and saying, look, I need this from you every single week. You're not doing this right. I need you to report it to me like this. I need to see it like this. This needs to be more timely. You can't be afraid of hurting their feelings, but at the same time, and setting that expectation, but you need to spend the time training them. And the video way that you just mentioned is a great way to do it. And it's a great way to outline your processes too. I'll do a video like that and then say, you go outline the process now to make sure you understand it instead. And it helps a ton.
Yeah, 100%. So last question, then we'll wrap it up here. So that's more of the systems and internal side. And this is a great question by John. How do you find good contractors, GCs? By the way, this is everyone's question mark. And I did a few projects up in Ohio, Cleveland, and I can't tell you how many we had to go through to find a good one. It's Texas seems to have more high quality ones. Arizona's been tough too. It's hard.
It's hard right now, and you have to be able to promise volume to get the right ones. And it comes down to setting that expectation up front, asking for a detailed renovation bid and making sure that that looks adequate. Saying, hey, we have a construction contract. Are you okay signing that construction contract? Do you have a license, and do you have insurance for workers' comp and general liability? Those questions alone will cut out 90% of the bad actors that don't have those things set up. And then it comes down to controlling the money so that they can't screw you. So you do construction draws with inspections on every aspect. And if they haven't finished that work, then that draw doesn't happen unless they finish that work. You have to have tight controls and not ever let up on those controls, because the moment you let up on those controls and be the nice guy, I've learned from experience, it bites you in the butt,
Yeah. And by the way, never pay a contractor up front all the money. Never do that. That's a bad mistake. Great. So with that said, we're going to take a break. Matt, it's been great. And again, at the end of this event, we're going to have the replay of the video. We're going to send you out links as to how you can get a hold of Matt or anyone else on this call, whether it be Mitch, Zuber, any of those people. So we're going to take a 15-minute break for lunch. It is West Coast time. And then Bill Danko, the best-selling author, I believe it's like 3.5 million copies, just incredible. He'll be on to speak about the road to riches through his learnings. So thanks, y'all.